everyone, this is Ruth the Forex Lady here with another video, and today we are going to talk about one of the ways you can use to identify highs and lows in the markets. This is a really exciting video, so get ready. Before I begin, subscribe to my YouTube channel, and are you over there in our Telegram channel? Links in the bio. Let's get started. So, we are talking about highs and lows in the markets. Now, one thing I know, two things for certain, one thing for sure, that I am absolutely positive is that every single day the market forms a high and a low. This is a fact. Every day the market forms a high and a low. Now, how this high and low presents itself would change. The presentation may vary. You may get an M formation, you may get a W formation, you may get a wick, you may get price just going down and then coming right back up, or going up and then coming right back down. But the fact remains that price always forms a high and a low every single day. Let us look at that. So on this particular day, this is the high of the day. We're looking at the 27th, and this would be the low of the day, meaning this is the highest point that price went to for this day, and this is the lowest point that price went to for this day. Let's look. Let me remove my EMAs so that you can see a bit clearly. Okay. On this particular day, this was the low of the day right by the quarter point, and this is the high of the day. This is the highest point, and this is the lowest point. Let's look at the following day. Okay, this is the highest point that price went to, and this is the lowest point that price went to. Let's look at the following day. This is the highest point that price went to, and this is the lowest point that price went to. So as you can see, every single day, price or the markets makes a high of the day and a low of the day. Now, as traders, one thing that we know is that in order to make profit or consistent profit, what do we need? We need to sell at a point where price is going to continue going further down, or we need to buy at a point where price is going to continue going further up. How do we identify these areas? Now, one of the ways we can do that is to go on the 1 hour and use our TDI. So I'm going to show you guys how you can use the TDI as a means for confirmation that price is at the high of the day. What's our 1 hour chart? Any pair would do. I'm using gold. So let's look at yesterday. Yesterday, what we are looking for is price coming out of our Bollinger Band on the 1 hour. Price came out of the Bollinger Band, and then it went up a little bit, and then we had a beautiful sell. Now, does it mean that once price comes out of the Bollinger Band, we start selling? Absolutely not. We obviously need to look for additional confirmation. So what I would do, I would make a line. Okay, price came out of the Bollinger Band here. I will go to my 15-minute now, and then I would say, okay, now I can look for, I'm going to insert my moving averages. 5 and my 13 moving averages. Okay, and I can say, okay, when my 5 and my 13 crossed on this candle, this was a perfect entry. We had a pullback of 18 pips, and we had over 50 pips to capitalize. If we're still holding it, we'd be up over 100 pips. Okay, let's look at another example. Once again, price came out of the Bollinger Band here. Are we going to enter there? Absolutely not. We are waiting for our confirmation. Now, this is not my trading time, but it still played out. And then we had 50 pips to capitalize on in that sell. Let's look here. Price came out of the Bollinger Band here. Now let's go down to the lower time frame. And then as we can see, when we had our 513 crossing, we had over 100 pips to the upside. Let's look at another example. Price came out of the Bollinger Band here. And then when we had our 513 crossing, we had over 40 pips to the upside. I hope you all are seeing pattern. So it's very easy and it's very simple. You go to a 1 hour time frame. So like right now, price is outside the Bollinger Band currently. So what I'm going to do, I am going to wait. I'm going to wait. Now this can continue selling and that is fine, but I am going to wait for those who want to trade this way. This is another method that you can trade. It's highly profitable. You can simply wait until you get your 513 cross or even price closing above our 13 EMA. Some persons also use the 13 EMA as a means to enter the markets. Once price has closed above your 13 EMA or you have that 513 cross, then you can start to look for potential buy for between 30 to 50 to 100 pips. Okay, so thank you guys so much for spending this time with me today, and I will see you all in the next video. Bye.